Hello and welcome to another episode of the Financial Freedom Show. This week we're going to do a review of my portfolio so far, and I'm going to go over some of the new purchases that I made in this account. We're also going to review the FTX disaster, the crash of the crypto market, as well as the rally that we had on Thursday. The S&P was up more than 5%, which was insane. Without further ado, let's get into today's video. So as you can see, my portfolio is up massively. I recently deposited $9,000 into JEPI. That was a new purchase that I made this week. My reasoning behind this purchase was that I see the market continuing to trade sideways or even down in the next couple of weeks and months. That's usually a good time to own JEPI, is when the market is trading sideways. You get bigger dividend payments, and I'm going to hopefully use that income to buy more SCHD. So I will be depositing more next week into SCHD. That way it evens it out a little bit more. And then continuing to add to both positions as I feel fit. I am looking to increase my monthly dividends. Right now, my current payout is about $200 a month with the new purchase that I just made in JEPI. And then every quarter, I get $100 from SCHD, so about $300 every new quarter that month that starts the new quarter. And then I'm just looking to increase my position sizes. So you'll see that early on in this portfolio, my deposits will outweigh my gains by quite a bit. A large portion of the increases in the value will be from deposits. And then as time goes on, hopefully my dividend payments and my value overall that increases will be greater than my deposits that I make. I'm looking, like I said, to get this portfolio up to at least $1 million in this series. And I will keep you posted on how that goes every week. I am thinking about posting every half a week. That way I can keep you up to date more with the current market and let you guys know what's going on with my portfolio as things work out. Speaking of the current market, Thursday was a crazy day. The S&P 500 went up more than 5% in the biggest rally in 2 years after a lower inflation report than was expected. So as you can see in this article, stocks mounted their biggest rally since October 2020 as the CPI data was lower than expected. The Dow Jones Industrial Average jumped 1,201 points, or 3.7%, to its biggest one-day gain since stocks were emerging from the depths of the pandemic bear market. The S&P 500 jumped 5.54%, and its biggest rally since April 2020, and the Nasdaq surged 7.35%, its best since March of 2020. So the October's consumer price index rose just 0.4% and was at 7.7% from a year ago, its lowest annual increase since January, and a slowdown from 8.2% the prior month. Economists were expecting increases of 0.6% and around 7.9%, according to Dow Jones. Excluding volatile food and energy prices, so-called core CPI increased 0.3% for the month and 6.3% on an annual basis, also less than expected. Treasury yields plunged after the CPI report, with the 10-year Treasury falling 30 basis points to 3.81%. as traders bet that the Federal Reserve would slow its aggressive tightening campaign that's weighed on the markets all year. The yield of the 2-year Treasury dropped about 30 basis points to 4.32%, and the US dollar, another recent pressure point for stocks, tumbled to its worst day since 2009 versus a basket of other currencies. Interest rates are still running everything in the markets. With today's CPI coming down, the market is now betting pretty clearly that they think the interest rates are coming close to an end. The interest rate rises. I don't really believe that's the case. As in the past Federal Reserve meeting, it sounded like we weren't even close to decreases in the rate, and now even with this rally, that's going to make things even worse, in my opinion. Tech stocks that have been hit the hardest by the rise in inflation and surging interest rates led the gains of Thursday. Shares of Amazon were about 12.2% up. Apple and Microsoft each advanced more than 8%, and shares of Meta rallied more than 10%. Tesla jumped 7%. Semiconductor stocks got a boost too, and basically the whole entire market went up. So that was insane volatility in the market. Another thing that caused volatility this week was the collapse of FTX, the crypto exchange. FTX filed for Chapter 11 bankruptcy, followed by a failed takeover of Binance earlier in the week. And Sam Bankman-Fried resigned as CEO after engineering a liquidity hole of billions. They're calling this a black swan event. Basically, the entire FTX exchange, both US and international, filed for bankruptcy, and that caused a bunch of instability in the crypto market and crashed all cryptocurrencies this week. Definitely not a fun time for crypto investors. A lot of people lost a lot of money on this. As you can see, they even said people like Tom Brady and other sports figures who basically invested in this platform lost money on Thursday. So definitely a black swan event, and definitely something that is kind of like a Lehman moment for the crypto market. I would not want to touch crypto with a 10-foot pole, but that's just me. Anyway, back to my portfolio. As you can see, I'm up to 33,449 this week, which is awesome, with a market gain of 1,758 overall. And I'm up 18% overall in this portfolio, which is amazing. I want to continue this performance increase. Hopefully with owning JEPI, and if the market goes sideways, it'll continue to beat the S&P this year. So that's all for this week. Thank you for joining me, and hopefully I'll have another video to you before the end of next week.